Welcome back to How Money Works in Canada. There's a system running your financial life in the background. It doesn't care how hard you work. It doesn't care how smart you are. And it definitely doesn't care how stressed you feel. That system is your credit score. Most people don't learn how it works until it's already hurting them. Today, we're fixing that. Let's clear up the biggest misunderstanding right away. A credit score is not about how much money you make. It's about how predictable you are. In Canada, your credit score usually falls between 300 and 900. The higher the score, the more confident lenders feel about you. Think of it like this: your credit score is a reputation score, but with banks. And that reputation quietly affects whether you get approved, how much interest you pay, how flexible lenders are with you, and sometimes whether you get housing at all. Two people can earn the same income. One gets approved easily. The other gets rejected. The difference is credit behavior. So how is your credit score actually calculated? There are 5 main factors. The first, and most important, is payment history. Did you pay on time? Every time? Late payments hurt more than most people realize. One missed payment can stay on your report for years. The second factor is credit utilization. This is the percentage of your available credit that you use. If your limit is $1,000 and you regularly use $900, the system sees you as financially stressed, even if you pay it off. In Canada, the safest range is under 30%. This one habit alone can move your score significantly. The third factor is length of credit history. The system rewards stability. Older accounts that are well managed help you more than new ones. This is why closing old cards can sometimes hurt your score even if you're trying to be responsible. The fourth factor is credit mix. Credit cards, phone plans, car loans. You don't need everything, but having more than one type shows experience. The fifth factor is new credit applications. Every application creates a hard inquiry. Too many in a short time makes lenders nervous. Credit doesn't like urgency. It prefers consistency. Now let's talk about credit cards. In Canada, credit cards are one of the most powerful financial tools available. They help you build credit faster than almost anything else. But they also carry interest rates above 20%. That means credit cards are either a leverage tool or a long-term liability. There is very little middle ground. Here's the rule that protects you. If you can't pay it off this month, don't put it on the card. Minimum payments are not progress. They're permission to stay in debt longer. Now, if you're new to Canada, pay attention. Your credit history from another country does not automatically transfer here. You're starting from zero. That sounds bad, but it's actually an opportunity. A clean slate means no mistakes on record. The smartest move is simple. Start with one card, use it lightly, pay it in full every month. After 6 to 12 months, you stop being invisible to the system. Credit is not built by big moves. It's built by boring, consistent ones. Let's talk about mindset for a moment. Credit is not income. It's leverage. Used well, it lowers your cost of borrowing. Used poorly, it taxes your future. People with strong credit don't chase credit. They manage it quietly. They let time and consistency do the work. Let's lock this in with a few key truths. On-time payments matter more than income. Low utilization matters more than high limits. Patience matters more than shortcuts. This system is not emotional. It's mathematical. Once you understand the rules, you can outperform people who earn more than you. Before you go, subscribe and like this video. And leave a comment. Tell us what you're confused about. Tell us what you want explained next. We read the comments. We listen. And we build future episodes based on what you ask for. If it fits the mission of this series, we'll cover it. Next episode, we're breaking down Canadian bank accounts, fees, and how banks really make their money, so you don't overpay without realizing it. This is how money works in Canada. We don't guess. We understand the system.